This video is sponsored by Cake Wallet, the easiest open source wallet to store Bitcoin, Monero, and Litecoin securely on mobile and desktop devices. When buying, selling, and exchanging crypto or trading for gift cards, Cake Wallet ensures privacy and security, giving you the keys to your coins. Good morning, everyone. Welcome back to the Daily Zest. I'm your host, Randi Hipper, here today on a lovely, lovely Wednesday. We are midweek, my friends, midweek. I love being midweek. Hope you guys are doing well everywhere, whether you're watching from TikTok, YouTube, Facebook, Rumble, Kick, everywhere. Hello. It's nice to see everyone. Make sure you guys are smashing these likes, subscribing, sharing the stream out with friends, and of course, jumping in that chat. The more we interact with the stream, the more YouTube, the more social media decides to share it out, and the more other people can learn about what's going on and get funky and zesty with us. Make sure you guys, if you have not, check out our sponsors. Cake Wallet. Cake Wallet is an open source, beautiful wallet. Link is in the live chat and in the description. Make sure you guys check it out and let me know your thoughts. Also, check out lovely market Cipher. Make sure to use code missteencrypto or code zesty for 20% off at checkout. Again, link is in the live chat and in the description. Welcome to the show, my friends. Welcome. Morty says Cake Wallet. Yes, that is the right thing. CakeWallet.com. Please visit. Patrick, nice to see you over there on TikTok. Let's say hi to everyone in the chat. Let's see. Okay, so we got Jerome Powell live, actually, so we're going to jump right into that. I'm not even going to, I will talk to you guys, as Jerome Powell is talking, but yeah, okay. So we're going to cover Jerome Powell. He is live from the European Central Bank, and you know they're planning their CBDC. They just published something about the digital euro, but we're jumping right in. Sorry, guys. Smash these likes, share this from out. Let's do it.
Nice having you in this closing moment. And I'll take this opportunity to thank all the contributors, those who have prepared papers, those who have worked with the presenters and all the panel members. It's been really, really a rich conference, and I want to
We love Christine, don't we?
So, as far as the European Central Bank is concerned and the Eurosystem at large, we have covered a lot of ground. We have increased our interest rates by no less than 400 basis points in very short order, less than a year. And we still have ground to cover. And I think that, as I said earlier on, we are data dependent. We will decide on a meeting-by-meeting basis, but we know that we have ground to cover. And if our baseline stands, then we also know that we will very likely hike again in July.
What about September?
That I will not tell you, and for a very simple reason that I just mentioned, we are data dependent. We'll decide meeting by meeting, and we'll tell you for the September meeting we will have received a lot more data, information, survey results, and it's going to be another projection meeting prepared by the staff of the ECB. So we will have a lot in our hands to make our decision then.
Governor Bailey, you surprised the market recently, raising interest rates by 50. You did a double. Why did you feel the need to do that?
Well, it really picks up on the theme that Christine has just developed. First of all, the UK economy has turned out to be much more resilient, and that's a good thing. There's many good aspects to that. But what goes with that resilience is signs of a very tight labour market, which is showing through in pay awards, but also showing through, we have an unemployment rate of 3.8%, which is historically right at the low end. So that resilience is coming through that way. But when we looked at again, to Christine's point, when we looked at the data, because we too are being driven by evidence at the moment, the cumulative data, both particularly on the labour market and on the inflation release we had, which to us showed clear signs of persistence, caused us to conclude that.
Okay. I want to say hi to everybody first because Jerome Powell isn't talking yet. So I'm listening behind the scenes to see if he's talking yet. But I want to say hi to everybody in the chat. I hope everyone is doing well today. It's nice to see everyone. I know the other miner is in here asking for some pull options that are just not right. Overboard, nice to see you. Welcome to the show. Alexandra G, my girl in the chat. Nice to see you as well. All right. We got Randy in the chat. Emma. Who else? We got Taco Berry, my fave. Cool kid, Uncle Jimmy. Nice to see you as well. Let's see. We have Guy in the chat. Our daily dose of crypto sunshine. Thank you. I appreciate that. Commander Crunk, nice to see you. Colin McKenzie, always good to see you as well. All right, guys, hold on. I'm trying to come back. I'm working on it. Sorry, guys. Computer crash. 1 second. I'll be back. All right. Well,
you see is stronger than expected growth, a tighter than expected labor market, and higher than expected inflation.
all right, guys. I'll work on
So
coming
that
back,
tells
but
us
let's
that
watch
although
Jerome for now.
policy is restrictive, it may not be restrictive enough, and it has not been restrictive for long enough.
So I don't get why you
I can't get myself
didn't raise
back on.
rates at the last meeting, especially I think it was a surprise that it was a unanimous decision to hold rates steady when you said a majority think that they still need to go farther on raising rates.
It's really just as you get closer and closer to the goal. What we're aiming for is a stance of policy that's sufficiently restrictive to bring inflation down to 2% over time. As you get closer to that, you get closer to the place where the risks become more in balance. So, we did 4 75 basis point hikes in a row starting in June of last year. In December, we moved down to 50. Then we did 3 consecutive 25 basis point hikes. So this is really just a continuation. We're going to move the decisions a little bit, make them with a little bit more time in between them, in an effort to get more information from the data to see how much restraint is really coming from these, through the pipeline from rate hikes that we only made now, in many cases, 6, 8, 9 months ago. So that's why we did it.
So maybe in every other meeting hike.
We've not decided that. So the only thing we decided was not to raise